big moves in the large cap space.
Banks, right? And really sort of blew the lights out with the moves that we saw. Actually, the scale of it was pretty staggering. We basically took out made a new high on the Nifty Bank. I mean, I think that tells you the story. You also, of course, had private banks, which basically were absent from any move that the Nifty Bank was trying to make. So the private financials participated. And I think that did the trick today, because Bank Nifty was weak largely because of sort of private banks. PSUs were just fine. PSU banks, SBI had a good week even last week. So today, private financials also participated. So, the top 6 gainers on the Nifty are all largely banks. As I said, Nifty Bank made a new high. We, by the way, on the Nifty Bank, as I said, have made a new all-time high. Nifty also took out, thanks to banks, took out last Friday's high, which is, 22,000, I think 260 or so. And we are now basically looking at an all-time high, which is 22,775. So for the Nifty Bank, that's come. And for the Nifty, let's see if you're able to get to it now. Very, very stock-specific action outside of banks. A very rich market, vibrant market. So much earnings reaction, stock-specific reaction based on news flow, those exchanges, BSE, etc., that we had out as part of headlines and much more. So really vibrant screen out there and a pleasure to track. Lots to do. Sudip.
Oh, absolutely. I'll just sort of take another minute to talk about that big banking move. As Prashant is saying, it is a 1,200-point move that we're talking about, and one that we haven't seen in a while, at least not in the last 2 months. The last time we had such a gigantic move on the Nifty Bank was actually the 1st of March 2024, this very year, so 2 months back, and then there was a bit of a lull, and now we've got a full sector move coming in. Why do I say full sector? Because let's name the stocks. ICICI Bank led from the front, 4% higher, but it wasn't alone. IndusInd, SBI, HDFC Bank itself about 1.5%, Axis Bank, and even Kotak Mahindra, which was slammed down because of the regulatory issues last week. Even that recovered and it participated in the rally. So it was well-rounded. Everybody was in. But beyond banks, there was some help coming in from a couple of other Nifty blue chips, the big ones. Reliance had a good session. L&T, TCS, these were some of the other names that chipped in. So all things put together, it was a very, very smart move on the large cap screen. Mid caps, well, we'll talk more about the individual stock reactions, a lot of earnings reactions playing out. But on the whole, you can, yes, say that there was underperformance because the mid-cap index was up about just about 0.5%. So paling in comparison to the Bank Nifty for sure. At an advanced decline level, it was 1:1. So one stock advancing for everyone that was declining. That was the kind of day that we had. Well, that's the overall market construct, what we saw today. Let's tell you about the show lineup then, what we have in store for you. We'll start off, of course, with more details on the movers and shakers of the day. Hormaz will fill us in all the stock-specific action. Lots of individual stocks to focus on today. BSE, MCX, both in focus after SEBI imposed regulatory fees on both the companies. Basically, the calculation changing, and that's having a huge impact on BSE in particular. Then, of course, we'll focus on a lot of companies where Q4 numbers came in and they led to some important price movements. So we'll talk about that as we go forward. Then, of course, we bring you D-Street chatter. Nimesh today is going to be focusing on Axis Bank and why there's a lot of buzz around this one. And last but not the least, all the events to watch out for in tomorrow's session. But let's get to the price action first. Hormaz has the details. Hormaz, over to you.
It's not very often when you get to say that the broader markets were underperforming the Nifty considering the market that we've been in. But today has been such a day. And we have the private financials to thank to see ICICI Banks record surge to a record high in today's trading session, 5% higher at 1160, also taking the Nifty Bank to a record high as well. But other private banks are not far behind as well. IndusInd, Axis, Kotak, that was beaten down all of last week, also saw some recovery, and AU Small Finance Bank as well towards making its path towards a universal bank, 7.5% higher there as well. PSU banks not too far behind, equally if not more in contribution with the private banks, Indian Bank, Bank of Maharashtra, all of them, all the constituents of the PSU bank index, barring a couple of them, ended in the red, ended with gains in today's trading session. Some earnings reactions, as you were highlighting, and earnings have been on the extreme as well. Ultratech, after a very strong set, ended higher by almost 3%. Trent saw some choppy moves after the numbers came out. Satin Credit Care also saw a sharp spike but cooled off from the highs of the day. IDFC First recovered from the day's low but ended 4% lower, as did Craftsman Automation, 6% lower there as well. Some specific stocks that I wanted wanted to highlight, and one of them is Spark, and that continues to go from one lower circuit to another. It was the 12th straight lower circuit for Spark in today's trading session, and now it's down almost 46% from the highs, recent highs, and 28 lakh shares are still outstanding in today's trading session. Supreme Industries, the best single day gain in 15 years, 14% higher at a record high. And lastly, of course, can't not talk about BSE, 13% lower there after the regulatory issues plaguing the company, the biggest single day drop since its listing. Back to you.
All right, Hormuz, thanks very much. So, as I said, there is a lot which has been happening, and of course, today was action-packed as well. Let's actually bring in our guests now. Sudip Bandyopadhyay of Inditrade Capital is with us. Shilpa Rout of Prabhudas Lilladher is also with us. Thank you both for joining us. Shilpa, if I can get a quick sense on the price action, especially on the Nifty Bank. I mean, it's sort of taken out the earlier high. What next from here, you think?
Prashant, as we have been speaking for quite some time now, the bank nifty should head towards 50,000 and 50,500 to 51,000 eventually. So this move was as expected because the kind of consolidation bank nifty has been witnessing from the past two series. This was on expected lines that one day a sharp move towards 49,000 will come, and above that you will see that rally happening towards 50,000 to 51,000 very quick. So that is what has played out today. So if tomorrow morning also when we open we are there, or with a gap of opening, they're still sustaining above this 49,000 mark, we will see the 50,000, 50,500 to 51,000 coming in no time.
50,000 is what, a percent away, right? So are we looking at a bigger move here? Because there has been some consolidation, especially in private banks, which has happened.
Definitely
Shilpa?
that was I'm saying that this move has happened after a big consolidation and without any meaningful contribution from the big boys like ICICI Bank or Kotak Bank as well. So the PSUs are rallying, but this move will definitely make you see that that levels of 50,000 will come in. So I'm very positive on the bank nifty now.
Okay, got that. We'll come back to you in just a bit. Let's also address some of the other stock-specific action that we had on the screen today. BSE fell over 12% and MCX was also down about 0.5% on the back of the changes in the computation methodology, which the regulator is going to now enforce to calculate the fee that these exchanges have to pay to SEBI. Vamakshi is here with more details. So Vamakshi, now this gets paid on the notional value of options contracts, right? So what's the damage? Clearly the street was quite disturbed specifically with respect to BSE.
Well, absolutely, and in a short while I'll explain why BSE was more impacted as compared to MCX. Now, let me just give our viewers a brief background. The companies have been asked to pay the regulatory fee to SEBI based on the annual turnover calculated from the notional value, the key word here being notional. And that is because the companies earlier were calculating the annual turnover based on the premium value for options contract. Now, let's break it down in terms of an example. For instance, consider a call option with a lot size of almost 10, strike price of 1,000 and premium of 100. If you buy one lot, the premium turnover would be around 1,000 per share, would be around 1,000, and earlier the companies were paying the fees based on this. But the option, the overall notional turnover includes the strike price plus the premium into the lot size, and in the example that I cited earlier, it would actually amount to almost 11,000, and SEBI says the regulatory fee should now be based on this amount. So definitely a huge jump up as far as the notional turnover, the basis on which the fee is being calculated. BSE is expected to pay 165 crores, while MCX is expected to pay nearly 4.5 crores. Jeffries believes that the higher fees could hit the overall EPS of BSE by almost 15 to 18%. They've gone ahead and downgraded the stock from buy to hold, given a target price of 2,900. While for MCX, Morgan Stanley believes that the differential fees are expected to account for only 1% of the company's FY25 PBT estimates. An underweight call for MCX is what they've given, target price of 2,100 rupees per share. But the regulatory setback definitely pulling both the stocks down in the trading session today.
Oh yes, absolutely, Vamakshi. Thank you very much. That example was also helpful in understanding how the numbers will just look very, very different now that this levy is going to be on the notional value of the options contract. Sudip, come in on this. Now, otherwise, BSE has had a dream run, right? The stock has gained over 400% in the last 1 year. So does this regulatory change become a bit of a red flag? Is it an exit flag? What would you advise people on both BSE and MCX as well?
Definitely not for MCX, because the impact on MCX is minuscule. and it won't, move the needle much. So MCX definitely not, and even BSE I would say not. Yes, unfortunate, and yes, it will impose additional burden on BSE, which will lead to their EPS coming down. I'm not sure about the 15-18%, but definitely it will come down quite a lot. We have to factor that in all future calculations. But considering the massive financialization of savings which is happening, and considering the flood of retail participation in capital markets, I think BSE is a good place to be in. It has given fantastic returns to the investors over the last couple of years, and I believe that it will continue to do so. So it will probably be a good idea to let the stock settle and then buy further into BSE for a long-term hold.
Okay. Now, coming back to you, so the banks, as we were talking about, were the big movers, right? Now, not all banking earnings which came through or financial sort of companies which reported numbers were taken well. There were some disappointments, etc., as well at the margin. Anyway, stock reaction was kind of mixed. Abhishek is here with what caught his eye. Abhishek.
Well, to begin with, ICICI Bank up almost 5% in trade after the numbers have beaten upward, but the core operating profit growth has slowed down a bit and lags the overall loan growth. Loan growth YOY is the weakest in last 12 quarters and sequentially is the weakest in last 11 quarters. Operating profit growth is at just 8.8% YOY, perhaps the weakest in last 11 quarters. But on the good side, cost to income ratio or operating efficiency is the best in last 5 quarters. Gross NPA and net NPA ratio are one of the lowest that you are seeing in last 9-10 years or even more. Deposit growth has come in and which is very strong both YOY and quarter on quarter. It's at 12-quarter high of 19.6% YOY and above 6% sequentially. Subsidiaries quarterly PAT has crossed the 2,000 crore level. This time it was led by ICICI General Insurance as well as ICICI Securities. Now the risk and balance sheet that's reduced massively. It's down to 9-10-year low, so risk weight to advances ratio is at 103% versus 115% quarter on quarter. PNL, both the ANA and PAT is a beat on our poll. PAT although aided by the decline in provisions as well. Now IDFC First Bank on the other hand, the numbers are below our poll and the guidance has been weak for at least H1 FY25. So credit cost now they see it at 1.65% versus 1.3% that they had in FY24. FY25 loan growth is now declined to 22 to 23% range from the earlier range of 25-27% that the management did mention after Q2 at CNBC TV 18. FY25 deposit growth is seen at 28 to 30%, which means that CD ratio or credit deposit ratio will decline from FY24 levels. In terms of Q4, the risk in the balance sheet is one of the highest in last 11 quarters. So RWA to advances ratio has increased to 119% versus 117.8% in the previous quarter. ROA or return on asset is at 7-quarter low of 1%. On the good side, asset quality has improved. PNL, however, the ANA and PAT is below our poll. Now, SBI card revolver rate has improved for the first time in last 8 quarters. It's increased to 24% versus 23% in the previous quarter. However, corporate spends have declined massively for SBI card, a decline of 26.7% YOY and 55.2% sequentially. The net interest margin, that downward trajectory continues. It's at 4-year or 16-quarter low of 10.9% versus 11.3% sequentially. Annualized credit cost that remains elevated like Maruti at khatam hi nahi hota hai. So that has come in at 7.6%, which is a 9-quarter high. Asset quality, the hiccup continues over there. It's increased by 12 basis points in terms of gross NPA ratio. Back to you.
Okay, all right. Thanks for the wrap. Abhishek, lots and lots of financial numbers actually to analyze and look at today. Shilpa, let me actually start with you and go back to ICICI Bank. I mean, clearly the street was liking the positives more than focusing on the loan growth issues there and abouts. Looking at the move today, what are the next levels and would you advise a fresh entry now?
Definitely, but yes, like I said, Bank Nifty heading towards 50,000 to 51,000. This banks will also participate in that case. ICICI Bank also will move towards 1200 to 1220. So like I said, but tomorrow opening and sustenance of the day is very important to see whether we are witnessing some sort of consolidation further this the move that we saw today, this momentum will continue, and you will see that the targets getting hit straight away. So on declines towards 1140 to 1120 zones is a good also sweet spot to go long for ICICI Bank for the targets of 1220 to 1250.
Sudip, I mean, if you had to buy one, if you think, I mean, let's assume banks are headed higher after a breakout of a consolidation, etc., and you don't own a banking name, what's the best idea from here?
Well, Prashant, I think RBL, that bank has done a lot of good things. A lot of things have happened, but somehow the market hasn't yet appreciated the good work which is happening in RBL. And definitely, this is one bank worth buying for a 1 year kind of time horizon.
Okay, all right. Got that. Thank you for joining us, both of you, Sudip and Shilpa. Appreciate your time here on CNBC TV 18. Let's start with some of the top corporate voices of the day that we spoke with, actually. Apollo Hospitals was down 4-5%. It recovered from the day's lowest point. Advent International has signed a deal to acquire over 12% stake in Apollo 24/7, which will merge group company, the distribution arm, KMED, for 2,475 crores. The deal comes at a discount to expected valuations. The firm's managing director, Sunita Reddy, believes that this deal will establish India's largest omni-channel play and bolster the company's balance sheet going forward. She also outlined plans for margin expansion and said that they were targeting a rise in the combined entity's margin to between 10 and 11% from the current 7 to 8%, that is by FY27.
Meanwhile, HCL Tech was on our radar after reporting a disappointing set in Q4. The firm's management said that they remained optimistic about maintaining growth leadership in the current fiscal year. The company also added that 19 to 20% aspirational margins has been pushed forward in the future. For the current year, FY25, they'll be targeting 18 to 19%. Nestle India CEO Suresh Narayan has responded to the controversy on added sugar in baby food products. In a conversation with Mangalam, he said that the company was compliant with the law of the land. He further claimed that the added sugar had been reduced by 30% over the last 2 years, and the company is testing zero sugar variants for infant food in India now.
They have indicated to us that they would like to pick samples of some of our products. Indeed, this is being picked up across manufacturers. So we wish to clarify that this is not just Nestle. There are different manufacturers. Their products will be picked up for analysis, whatever analysis that FSSAI chooses to do, and we respect that. Now, this added sugar, we have reduced it by 30% over the last 5 years. 2 more points. Point number 2, there are products in Europe and products in Asia which have both no added sugar and added sugar. The efficacy of the recipe based on local regulatory conditions and based on local habits determines the quantum of sugar that the product contains.
All right, well, there's Nestle for you. We'll take a break here. We are back. We'll get you the D-Street segment with Nimesh on the other side and tell you the events to watch out for. Stay with us.
Welcome back. Top market events to watch out coming up in just a bit. But before that, let's, as usual, go across to Nimesh and take a stock of all the chatter from dealing rooms today. So, Nimesh, what did you pick up? Big move today on the large cap side, especially banks.
Oh, absolutely. No, big moves largely in the Nifty, and that was largely led by the banks names. So the Nifty bank index ended up nearly 2.5% higher. A lot of individual stocks within the financial names were big movers in today's market. However, the mid-cap index relatively underperformed. So largely it was a large-cap driven rally in today's market. In terms of individual names, though, the first stock on my list is Jain Irrigation. Big move in that stock and large volumes as well. I understand some bit of HNI intentions to be back on that stock, and hence a big up move there. The second stock is ICICI Bank. Within the private bank names, this stock stood out largely on very strong buy flows. Expect high delivery volumes in ICICI Bank in today's trade. The third name is DB Realty. Even that stock recovered sharply from the day's low and large volumes as well. HN interest is quite high on that stock. I understand the street is anticipating some corporate developments, one including a large joint venture as well as the demerger ratio of the hotels business. So that is something to try going forward in that particular name. And the last one is GNFC. Even that stock actually ended at day's high. There were very strong buy flows, and I understand some long-only funds are active buyers in GNFC at these levels.
All right, GNFC, DB Realty, Axis Bank, Jain Irrigation. Thanks very much, Nimesh, for that. So that's D Street chatter, as always. Now, it's earnings season, so lots of earnings to watch out for. But what else? Vamakshi is standing by with that list. Vamakshi.
Well, absolutely, Prashant. A lot of earnings to watch out for. We will be keeping an eye out on a few Adani Group counters like Adani Energy, Adani Total Gas. Apart from that, also keep an eye out on Cholamandalam Investment, Excite, 5-Star Business, Gravita India, Havells, IndiaMart, Intermesh, Indus Towers, IOCL and RDC, among some others. As far as Tata Motors is concerned, that stock will also be on our radar because an AGM is scheduled to happen tomorrow. Watch out for JNK India because it will be listing on the stock exchanges. As far as some domestic cues are concerned, keep an eye out on India infrastructure output, and from a global perspective, it is important to monitor the FOMC two-day meeting, which is expected to commence tomorrow. Apart from that, China's Caxin manufacturing PMI and European Union's inflation rate are some other key data points that we will also be watching out for.
All right, Vamakshi, thanks very much for that. So lots and lots of earnings is what's on the radar, apart from, of course, that FOMC meeting, which starts, but of course, decision only on Wednesday. Well, it's a wrap on this edition of Markets Forward from all of us here. It's goodbye. Thank you very much for staying with us. More coming up on the other side.